The ride is getting as crazy as it has been the last week or 10 days or since the beginning of the Trump administration for all that. I'm going to encourage you today to please stay with me through the entire thing. If you've got the time, speed it up if you have to, whatever you have to do. Normally, I spend about 2 hours prepping this particular show. I've spent the entire day today prepping this show. Very, very critical stuff today. And it's not going to be just in the beginning or the middle or the end. It's going to be throughout the entire presentation. Let's start with what Trump just said. President Trump just said he's not making a deal with China until it solves the trade deficit. It has to solve the trade deficit. He was asked about the stock market decline and responded, sometimes you have to take your medicine. Trump said earlier today he had no intention to crash the market. That is not part of the plan. But I don't think, as I said before, I don't think he cares. I mean, I think he cares, but I don't think that's at the top of his list. The top of his list is there has to be a full-on international reset of the way, a global reset of the way that commerce moves, because the United States is not in a position to continue along this path. They just aren't in a position. The path would be disastrous. We will, of course, talk about the stock market later on, the details of what's going on in the pre-market. We'll talk about what's happening with Tesla in terms of the overnight numbers later on in the program. We will talk about what I think is going to happen next week, as well as what's happening tonight. We'll talk about that and so much more. Now, anyone who cares to pay attention right now is getting an amazing economics lesson. Unfortunately, some of the professors out there don't know what they're talking about. And so many folks who are not digging deeply, not looking to 2 or 3 or more sources, are going to get it all wrong. And I can't tell you how many things I watched today, yesterday, the day before, on the various talking head shows where the people were just clueless. Okay, let's start out with some fun stuff, though. Let's start with some fun news about Tesla. Sawyer Merritt reporting the president. Listen to this now. The president, not our president, but the president of the U.S. Oil and Gas Association just ordered a Tesla. Sawyer says, we're living in wild times. That would just be one more evidence of it. The U.S. Oil and Gas Association puts out this post today, protesting the protests yesterday by protesting in my own way. He says, with his wallet. And then he goes, let's go. He is now a proud Tesla owner. All right, from Michael Guilfoy, the second director, cell manufacturing operations at Tesla. So this is about Tesla batteries. He says he's been waiting to acknowledge this great achievement by Tesla's 4680 cell manufacturing team since the end of last year. But as Elon announced last night, our cell manufacturing team in Texas reached a huge milestone at the end of 2024, with the battery becoming the lowest cost per kilowatt hour battery cell producer for Tesla. The grit, determination, and passion of our team is unbelievable in helping deliver our mission. A big thank you to our entire engineering team, etc., for making such a massive impact and to accelerate the world's transition to sustainable energy. We aren't done yet, he says. 2025 will have more big, major milestones with fully ramped dry battery electrode manufacturing to deliver even more cost efficiency. He says exciting teams continue to be ahead of the plan. Cheers to the world-class team. And this from Yahoo Autos. Unnamed sources quoted by Reuters say Tesla is planning to launch a lower-cost electric vehicle this year. No kidding. This was reported in Inside EVs. Codenamed the E41, this new car will be a smaller version of the Model Y crossover and will cost at least 20% less to manufacture than the current Model Y. I would say at least is right. The affordable Tesla will initially be built in Shanghai. That would be news if that's true, and will use existing assembly lines. That has been known all along, and technologies to keep costs low. Mass production will be in next year in China. Okay, so that's all wrong. So next year in China, no, followed by manufacturing in Europe and North America. Well, that would not be the plan. Everybody's expecting this to be before the midpoint of this year. So let's hope that this information is completely wrong. The new information counters earlier rumors that Tesla's cheaper EV would be just a bare bones version of the Model Y, not something unique unto itself, wrote Lulian Dinastran for Inside EVs. For buyers, I mean, really, that last name is Dinistran. Dinstran. Anyway, for buyers, this smaller, budget-friendly Tesla could make electric vehicles more affordable to a larger audience. Less expensive EV options means more people would be able to switch from gas power to BEVs. Like when Tesla cut prices on the Model 3 in Mexico last year, this move could help more consumers save money. All right. That announcement, it says, comes as Tesla faces slipping market share and sales across multiple regions. This is such nonsense as usual. The company saw a sales decline in Europe last year, with registrations down 10.8 from 2023 numbers for the European Union and several other countries. In China, Tesla's market share on the all-electric car market fell from 11.7 to 20. Why am I even reading this to you? All right, let's go to. Oh, that's it for Tesla news. Now we're going to get into the general news, the general stock market, and then we'll talk about what's happening in the markets, and we will talk about all the things that are happening this week, as we always do on this show on Sunday night. The show, of course, is called Monday Morning. Now, I just listened to a long Spaces that included Jeff Lutz. He became one of the principal speakers in that Spaces, and everybody was, of course, impressed with Jeff Lutz, as they always are and should be. He said that 20% of normal supply chains in Asia are not booking. They're not booking containers. They're not booking ships. He worries about shortages developing. So what you have here is you have a situation where maybe I want to buy a bunch of stuff for my factory. I need this component, or I need this finished product in order to ship to, Target or Walmart. And, I'm getting ready to buy those things, and I'm like, I can't. I know they're made, I know they're manufactured, I know they're ready to go, but I'm not going to book space right now because I don't know what the tariff's going to be at the other end. I want to make sure that I don't pay 25% if I can get it for 5%. So I'm not going to book that. I'm not going to book that product. According to Jeff, it works the other way too, is that some suppliers pay on larger companies pay very close attention to what that company is able to, what their status is, whether they're going to be able to pay, because I always had to do everything on an LLC or pay in advance, or, some kind of a method that was going to, my customer, the company in China or Taiwan, wherever it was assured they were going to get paid. But a lot of bigger companies, bigger than what my company was, would be able to get that on terms and only pay for it after it arrived, or 30 days after it arrived, or whatever those terms might be. So some of those companies in Asia right now might be saying, we're not going to even ship you right now because we don't know if you can afford the tariffs. Once it arrives, we don't know if you'll be able to take the ship. When it gets there, we don't know if we're going to get paid. So anyway, he's saying right now there's about a 20% drop in bookings. And one of the other commenters on the Spaces said that there has been a drop in the amount people are paying for containers right now, which would be an indication of less demand. All right, so that's very important. Now, here's a Randy comment. This is not from anybody else's. So I don't think President Trump is thinking this way. I don't think that he's thinking that he might just. I'm sorry. Let me start this again. What I'm going to say, I don't necessarily think that this is the way the president has come to his conclusions, but he might just get lucky. You see, the timeline to bring manufacturing back to the U.S. in any meaningful way, as Jeff has been pointing out, is 1 to 2 years. You got to design the plant. You got to decide how you're going to, lay it out. You're going to have to decide what size building you're going to rent or buy. You're going to have to, in some cases, build the plant. Some other cases, renovate or bring the plant up the standards that you need to bring your product in there. A lot of times you have to build the tooling. That's going to take the longest, although sometimes it's the equipment that is, making the product that will take the longest. But all of that, in the best case scenario, is going to take a year. And sometimes it's going to take longer on some more complicated or larger kinds of enterprises. But what are you going to have in a year? What are you going to have in a year from March? What are you going to have in a year from June, actually, according to Elon Musk? You're going to have 50,000 Optimus robots ready or the beginning of the ramp of 50,000 Optimus robots that can be used in those new plants. The next year, it's going to be 500,000 Optimus robots. And the next year, it's going to be 5 million Optimus robots. In the meantime, you've got Brent Adcock at Figure and others who are also promising similar numbers. So you're going to have literally millions and millions of robots from the US and from Canada, from other places, that are going to be able to come in and begin to make the product in these plants. Now, once you've got a robot making the product in that plant, you've completely leveled the playing field with every other country in the world, at least in terms of labor. And that's the number one thing that always gets in the way of being able to make something in the United States versus somewhere else. So that's a massive change to the world economy. And it's not going to happen in small numbers. We're talking about, again, in 2 years, we could be looking at a run rate of 10 million bots per year. Well, that's way more people than only about 3 million people enter the labor market or need to enter the labor market in the United States every year. So if you've got 10 million robots ready to enter the labor market, that's going to be enough to make the tennis shoes and make the garments and all the other kinds of things. But I don't even think those are the things that the president cares about. He cares about the strategic products like the pharmaceuticals, the pills. He cares about steel. He cares about aluminum. So all of these kinds of things where there might be some small difference between us and a trading partner in terms of our labor, those go away. These go away in a year and a half, 2 years at the most. So this is the perfect time to do this. It's a perfect time to completely change the world system in terms of where manufacturing is done, because it was probably going to happen to a large extent anyway. Well, this is from MarketWatch. Retail investors buy the dip pretty reliably whenever there's a stock market sell-off, and Thursday was no exception. But JP Morgan, which has been tracking investor activity for years, noted that this trend has strengthened since 2022. The investment bank also compared the April 3 dip buying to investor behavior during March of 2020, which was the last time the stock market fell at this pace. In contrast, individuals sold off their stocks on the days the market dropped in 2020. JP Morgan estimated roughly 75% correlation between investor flows and market performance in 2020. And even on the days individuals bought the dip, they opted for diversified ETFs instead of single stocks. This could point to a behavioral shift that has happened over the last few years, as investors get more comfortable buying into the market during large drawdowns. And I would say that's because a lot of these retail investors now are very wealthy and can afford to take these kind of risks. And maybe they've also gotten smarter over the years. They're older, so they're smarter. Of course, you buy when shares are down. You buy when there's blood in the street. That just makes sense. The buying on April 3rd was split evenly. That would be April 3rd, Thursday, split pretty evenly between single stocks, 2.3 billion, and ETFs, 2.4 billion. NVIDIA Corp saw the highest investor inflows with 913 million net buying, followed by 900 million flowing into S&P 500 tracking ETF SPY. This buying was the strongest around 11 a.m. Eastern time and then tapered off over the course of the day. So then that might have continued to happen on Friday and might continue to happen tomorrow if we're down again. People are like, well, the people that bought in on Thursday, well, they lost money since then. Yeah, guess what? They still bought it at a bargain compared to what it was on Wednesday. If they bought more on Friday, then they could have averaged down. This is what I would be doing if I was 10 years younger. I can guarantee you I would have been buying into this market. People even ask me, Randy, are you buying into the market now? No, I'm as invested as I should be for someone my age, okay? And to pull more money out of very conservative investments at this point would not make sense for me. I also don't need to. What am I going to do with the money? Just going to go to my kids anyway. All right. So this is from MarketWatch again. By the way, in case you haven't noticed, the two papers, the two online news magazines that I trust the most, clearly MarketWatch and Barron's. There's a few others that are good too, but by far you're going to see me leaning on MarketWatch and Barron's. They seem to be the most honest and the most thorough, the most deeply thinking than any of the others. The NASDAQ composite on Friday fell, as we know, 962 points, or 5.8, and the index has now officially entered a bear market. The NASDAQ is in a bear market, according to Dow Jones market data. Investors now want to know how long the tech-heavy index could suffer in a bear market, and perhaps more importantly, how technology stocks have tended to perform in periods after the NASDAQ closed in a bear market. Okay, this is important. Historically, since 1973, bear markets have typically lasted 111 days or over 5 months for the NASDAQ composite. The last time the index was in a bear market was when it fell over 22% from August 15th, 2022 to its low on December 28th of that year. History also shows, going back to 1973, tech-heavy stocks have typically risen in the first month after the NASDAQ entered a bear market. I want you to hear that again. History shows, going back to 1973, tech stocks have typically risen in the first month after the NASDAQ entered a bear market, with the index delivering an average return of 1.3 after 30 days. 1.3%, that's 14% a year, 15% a year. After 30 days, and over 7.1 over the following 3 months, which would be a rate of 28% per year, according to Dow Jones market data. Technology shares have even registered an outsized 12.9% average advance 1 year following the first close in the bear market territory. Listen to that carefully. The sharp market meltdown extended beyond technology names this week, with other stocks also bleeding into bear market territory or teetering on the edge. Small caps, once seen as the beneficiaries of President Trump's policies on Thursday, officially entered bear market also. The benchmark Russell 2000 slumped nearly 22% from its recent peak in November, according to FactSet. History suggests that since 1987, small cap stocks have typically extended their losses in the week after it fell into bear market, with average declines of 1.9% in the following 7 days. But the weaknesses proved temporary. The small cap index has historically rebounded with average gains of 6.8% over the 3 months after entering a bear market. Again, that is multiplied times 4, almost 28% a year, and nearly 12% over the following 6 months, which would also be 24% a year, according to Dow Jones market data. Meanwhile, the S&P 500 fell nearly 6%. The large cap index will have to close below 4,915, which right now, based on what we're seeing, it would definitely do that for a bear market to be confirmed. The Dow Jones Industrials was off 5.5. The blue chip index on Friday officially entered correction territory, defined as 10% decline. Is more than 10%. All right, so there you go. I mean, that's another way to look at this, is we have this historical data. I'm not saying you should invest now. I'm only giving you the data. I'm only giving you the analysis. And that's what I say to you all the time. For those of you who are new, don't trade on what I say. Listen to my analysis. I'm going to give you numbers today. I'm going to give you my expectations, but don't trade on what I say. That would be foolish to trade on one person. Okay. I'm going to give you my best analysis, and then listen to 15 other people, and then make your decisions and judgments. But only I would call it a fool's decision, a very foolish decision to say, oh, well, Randy says Tesla stock's going to go up, therefore I'm going to buy today. Please don't do that. Barron says this: Wall Street is starting to factor in some of the pain. Wedbush analyst Dan Ives has cut his price target to 315 from 550 a share on Sunday for Tesla. Ives wrote in a note that a brand crisis created by CEO Elon Musk combined with Trump tariffs equal a perfect storm for Tesla. Ives still rates the shares a buy. Let me just say a lot of stuff about Dan. I love Dan Ives. I think generally he's extremely smart. This is so wrong that it doesn't bear. I mean, I think you could tell me. I just ask you, put it in the comments below. Why is this completely wrong? Well, the number one thing is because the brand damage that he's talking about is not happening in China. It's not happening in, probably not even in Australia, Singapore, the Philippines, or 15 other markets around the world where Tesla is now being sold. It's probably the worst in Europe. We'll find out in very short order how Tesla Model Y does in Europe as the new one is released. And we don't know about the brand damage in the United States. My guess is, as we've said over and over again, the conservatives and Republicans are more than who didn't like Tesla at all. way more negative on Tesla than the liberals are now. Believe me, I know. I know they're my friends, they're my family. They had no interest. It wasn't even on their mind, and now it's on their mind, as was the president or CEO of that energy company up there when we started out. So this is completely wrong on that level. The number two thing is that Tesla is the beneficiary of the tariffs. Much more of their cars made in the United States. So no matter how all this pans out, Tesla is going to be the winner on this one. So I'm sorry, completely wrong, Dan. This time, ain't buying it. Sorry. Okay, what's happening this week in terms of the reporting? First of all, we have every governor, every president of some Fed thing, they're all going to be speaking this week. It starts on Monday with Adriana Kugler speaking. It'll be interesting. She'll be the first one out during this financial, or what do you want to call it, a stock market crisis more than anything else. That's another thing. Let me just say, I think this is a stock market crisis. This is short-term thinking, short-termerism. That's what I like to call it. It's like this decision was only on Wednesday after the market closed. The things that Trump has said was Wednesday. I know it seems like it was a year ago. The fact that the market is down 15% when they have no idea how it's going to come out makes 0 sense. It really makes 0 sense. Right now, I mean, as you know, it's down 10%. Now it's down another 5% in the pre-market, as we'll see in a minute. Anyway, everybody knows how Trump operates. The markets know how Trump operates. This is a knee-jerk reaction. We see this kind of knee-jerk reaction, like sometimes, let's say, on Monday, the consumer credit numbers are going to come out, and the consumer credits come out, and they're high, and everybody goes, "Oh my gosh!" and they sell stock, and then people look at it a little deeper. They go, "Oh, well, the reason it's high is because blah," and then okay. I think I got to tell you something. Whatever happens with the tariffs, it's going to be better than what was stated last Wednesday night. Okay? And pretty much everybody that is all the talking heads on both sides of the aisle, pretty much agreeing that if it was a 10% tariff across the board, if everybody was 10% or less, this would be a good thing, and the stock market would have gone up. Okay, so that may be where it settles down. And then if we get 10% of all the product coming in the country, in addition to what we're getting, in addition to the tariffs we're collecting now, that'll be a good thing for the United States. And if we also at the same time start bringing in some of that manufacturing because of it, that'll be a good thing too. All right, consumer credit, it does come out at 3:00 Eastern time, noon our time in California on Monday. The last month it went up 18.1 billion. They're thinking it'll go up 15.5. This could be completely wrong. A lot of people bought cars last month in anticipation of the tariffs. I wonder if that might have an impact. We'll see. All right. That's the only thing I know that might cause me to think differently. Yeah, I just don't know why it would be less than the previous month. It was also February is a short month. Oh, this is February. I'm sorry. This is February. February? The first week of April, we're looking at the February numbers. That's pretty sad. Okay, so consumer credit for February, they're thinking would have been down. Well, it's a 28-day month, and it's yeah, that's probably true. All right, March is probably going to be back up again. Tuesday, April 8th, the NFIB Optimism Index. You know that's one I love. They're not making a guess on this one. I'm going to guess that the 100.7 last month, it will be down from 100.7. I don't know how much, but I think the National Federation of Independent Business People, the business people in that survey, will not be optimistic. They will be anxious. And I think it's okay to be anxious. Well, I don't know, anxious. I don't get very anxious. It's rare. I don't like negative emotions, because of one thing, I'm going to be anxious about something I have no control over. Why would I do that? Okay, on Wednesday, we get wholesale inventories. Last month, they were up at 0.8%, suggested they'll be up 0.4%. That might be low because a lot of inventory right now of people bringing in their imports early, and those will be sitting in warehouses now. So this might be a complete blowout. We might see very high numbers here. A couple more Fed people talking on Wednesday. Thursday, we get the initial jobless claims as always. This is weird. They're not going to make a guess this week. Last week it was 219,000. They always make a guess. They're always wrong, even though it's almost always like in this narrow range. I'm going to say it's still going to be in that narrow range. Consumer Price Index is CPI is on Wednesday also. This could add a lot of fun. Thursday. This could add a lot of fun to an already probably very, very like this week, a very chaotic week. Anyway, last month it went up 0.2%. They think it's only going to go up 0.1%. Now look at that. CPI year over year, thinking it'll be dropping from 2.8 to 2.5. Without the whole tariff nonsense going on, this would be such good news. The market would probably be going up quite nicely on Thursday if this turns out to be true. Now, on the core, because they're taking out oil oil and food, they're thinking it actually would go up from 0.2 to 0.3%. And year over year, though, still down 3.1 to 3.0. So core going down. 3 out of 4 ain't bad. And it'll be interesting to see how that all comes out. Bunch more. Huge long list of Fed speakers on Thursday. And then monthly U.S. federal budget comes out on Thursday afternoon. Last month, that was $236 billion with a B. I think that would be the deficit. I'm not sure. Anyway, the federal budget will come out on Thursday. We will report on that on Friday. All right. Then on Friday, we get the producer price index. And last month, that was at 0.0. You might remember it was the headline number. This month, they think it'll be up, but only 0.2%. That'll be fine. The last month, the core was up 0.2%, which is okay. And the core this time, they're not guessing. Year over year was 3.2 and core was 3.3, and they are not guessing on those. Yeah, maybe because they're not sure how the imported products might be impacting. Okay. Then consumer sentiment preliminary. So this will be the first look at consumer sentiment on the new round of surveys that they're taking. And so last month, that was 57, came in way down from where it had been. And this month, they're saying dropping further to 55. That might put it in negative territory. I don't remember where the break is. Okay, so what in the world is happening with markets now? Let's start with Tesla just for fun because we would have that coming out right now. All right, so down about 10%. 219.50, so that's below 225. That's not a good news. But anyway, down 20%. Now that's down 20% since Friday. So that is a total over the weekend. It was already down 4% on Friday night, so it's down another 4%. All right, so but sharply down and then recovering a little bit. We'll talk about Tesla again. Should not be impacted as much as everybody else. It has not been going down as fast as it normally would. It has been outperforming the rest of the market. I would expect that to continue, and I might even expect Tesla to start running on its own gas. Can't use that. Running on its own energy soon, but maybe not Monday, depending on news. I mean, news could change everything between now and then. We got the president meeting with Bibi Netanyahu tomorrow. I think we're also going to hear from the what is he called? the head of the UK, Keir Starmer. There's going to probably be a lot of news tomorrow. Maybe even some more news tonight, but definitely going to be lots of news tomorrow, which could radically change everything tomorrow. We'll see. Now, going back, the president said we need to take our medicine. And what he means by that is the U.S. needed a correction. I've been talking about the correction for how long? 5 months? Probably 5 months since I started saying the stock market needed a correction. We were running at some points at 24 PE on the S&P, way too high. We needed the correction. We needed a correction because of the problems in the economy itself, in terms of these huge deficits and the amount of borrowing that we were doing. The correction needed to happen. We needed a correction because the bond yields were so high, considering everything that was going on. And so that was calling into question whether there was enough buyers to pick up the future treasuries as they were going to be coming available. Well, now we're getting some corrections, all right. Okay. So right now down 21.75 as of this point, 9% so far on Tesla. Okay, let's go ahead and look at the bonds. The bonds have dropped dramatically. We are now under 4% at 3.91. That's down 8.3 basis points over in the pre-market. It was already down, of course, heavily on Friday. So we're looking at 3.9. I'm looking for it at 3.75 is kind of I think that's kind of the stopping point. I hope that when the market starts going back up again, it doesn't drag the bond yields with it, but it might. So this might not be permanent at this 3.9 or less, but it's good to see. The 2-month is unchanged, and the 2-year is down 18 basis points. 2-year down a lot more than the 10-year down, which is only down 8.7 basis points. All right, let's go to oil. Oil down dramatically. Oil is down another $2.43. We are having that 50 handle. I mean, the 5 handle, $59 right now, and 57 cents. You'll remember that Larry and I think also Nicholas have all been talking about oil getting back under $60. Once again, same warning. It may not stay under 60 once we get the turnaround in the stock market, but for now it is. And so it's partially going to be because of worry about a worldwide recession. It's going to be partially just due to maybe just a slowdown in activity for a little while, but it's also because Saudi Arabia says that they're going to unleash their pumps. They're going to pump a lot of oil. The United States is trying to get to 3 million barrels a day more than last year. All of this is pushing oil down, which is part of the plan of the Trump administration. Obviously, getting the interest rates down is also part of the plan. Now, I don't think that the president purposely had the stock market go down 10 or 20% in order to get oil prices and interest rates down, but it has the knock-on effect, obviously. Natural gas down 2.24% at 3.751. Gold dropping also in a fairly substantial way, back under $3,000 at $2,997, down 1.25%. In the pre-market, silver down 2.84%, dropping way under $30 now at 28 and 39. Now listen to this one. Here's a biggie. This is kind of indicative. What you can look at this one as kind of, okay, here's what's happening with commodities. You got copper down 6.26% in the pre-market. We are now down to $4.12. Remember, we were over $5 at around $5.12. So this is a 20% drop in copper in just a few days. Now, once again, everything I just said about everything else applies to copper. Copper could go right back to $5.12 if we see a dramatic increase in the stock market, where everybody believes that there's not going to be a recession. So right now, this is partially thinking recession. This is partially thinking what happens with copper markets, et cetera. But in general, it could rebound dramatically. And again, you want to play commodities? Maybe that's a good thing to play right now. Certainly, if you had taken my advice with regard to bonds last year, at many different points, you would have made a lot of money on the bond market. Remember, though, don't take my advice. Take my advice and then listen to 15 other people and then decide what to do. Okay, we've got the dollar is mixed, really not doing that much. Interestingly, the dollar is mixed. And then the Bitcoin, it is down 4,701 at 78,180. And people are saying, well, since the Bitcoin is down, does that mean that everything else is going to down even more? No. Bitcoin didn't join on Friday. Bitcoin was only down a little, or I think it was down like 1,000 or something. It didn't participate on Friday. I don't know why, but it was a standout. So now it's just playing catch up. So it's down 5.65%. Okay, now let's get into the equity futures. Okay, we've got the Dow futures down 1295. What I will tell you is it's been jumping all over the place. That is 3.37%. It has been jumping around up and down big numbers, sometimes jumping like 100 at a time. And now these are just futures. These are not individual stocks. The futures are now at 1290 down. Okay, that's 37,240. It has been as much as 1,600 down. Now it's down. See, right now it just changed to 1,300, then 1,290. So it's down a ton, but it's not down as much as it was. This is, I believe this is key. You know, every market is different, and this market is very definitely negative, and people are taking risk off. But these guys aren't stupid. They know the rule about blood in the street. So there's going to be people that are going to be buying in about now. So S&P down 4%, just a little bit more than the Dow, sitting at 49.05. That would be in bear territory if it closes at that level tomorrow, or even a little higher. NASDAQ is down 5.03 as it would normally be compared to the Dow, at 16,675, 676. I'm sorry. And so there you are. That's where we are. What do I think is going to happen this week? Okay, here's what I think is going to happen this week. I think number one, we are going to have multiple headlines tomorrow, at least two, probably the UK and Israel, maybe more, maybe other individuals, maybe even more individuals will actually meet with Trump. Maybe some decisions will be made. Remember, part of what I've been saying all along is I think that every one of these agreements, well, not everyone, maybe with the Eurozone, you wouldn't have to have this, but maybe you would. There needs to be an agreement of what they're going to do to increase their purchases. Some of the nonsense that I'm hearing out there is that, oh, well, let's take an example of cars. People are like, oh, well, you can't sell cars in Europe because the United States doesn't make the right kind of cars. Nonsense. The cars that we make could easily sell in Europe, but they have all kinds of regulations that keep them from selling in Europe. They have all kinds of ways of keeping those cars out of Europe. Maybe people would really love to have some of these giant pickup trucks that we make over here, or some of the different kinds of SUVs that we make over here, but they don't have a chance. It's kind of like the United States doesn't have a chance to buy the Chinese cars because we keep them out. We're keeping them out. There's no doubt. Well, Europe's keeping our cars out too. So is Japan. Absolutely. There's no US cars on Japanese roads. You can't sell them there at all. Okay. So these are the kinds of things that, okay, give the market a chance. Make it so that the US car could sell, and then let the market decide. Yeah, that's what we're trying to do. Let the market decide. Yes, every country still needs to have some protectionism. People are asking me over and over again, well, how's this all going to work? You can't have the United States can't get all of the manufacturing business in the world. Well, no, duh. Okay, the United States doesn't want that. They don't want to hurt these other countries. No way, no, that's not going to help. And they don't want to hurt Mexico. They don't want to hurt Canada. But it's right now, it's out of balance. It's not working. Something else that people are not talking about, the U.S. trade deficit. When we have this massive trade deficit, it has to be funded. Okay, it's not a free lunch. How do you think that what happens with that trade deficit? Well, those are dollars flowing to China, dollars flowing to Vietnam, dollars flowing to Cambodia, dollars flowing to the Eurozone, dollars flowing to Canada, dollars flowing to Mexico. Well, what do they do with those dollars? They buy our bonds. Well, that's good. Thank you for buying those bonds. Oh, they buy gold. Okay, that seems okay. All of those things mean when they buy our bonds, that means we're indebted to them. Do you remember just a few years ago, people were worried, oh, we owe China so much money. They have so much of our bond debt. Or Japan, huge amounts of our bond debt. Well, that gives them leverage over us, right? I mean, it's not free. It's not free. So if you can reduce the amount of that deficit, then you have less of that overhang on our sovereignty, if you will. Anyway, we're not trying to kill any of these people. We're not trying to destroy their businesses. We're not trying to put them. What we're saying is we need some of that business back. And we especially need the strategic items, the pills, the steel, the aluminum, the car manufacturing, et cetera, et cetera. These are the kinds of things we need some of that business back in the United States. And we need you guys to buy some stuff from us other than just software. We need you to buy some atoms. And we can do that a lot of different ways, but one of those is we'll just tariff you until you scream uncle. Well, as you know, that's how Trump starts things out. So no, it's all incrementalism. If we can get 10% more income from the imports, and if we can sell 10% more goods across the world, if we can bring back 10% more manufacturing that we sell in our own country. I mean, that's 10%, 10%, 10%. It starts to make a big difference. It starts to impact what it is that Trump wants to accomplish. And who's it going to help? Who's the big winner on this? Let's keep in mind the big winner on this is the people that have been getting messed over for 40 years, and that is the working middle class. That is the guys who used to have the manufacturing jobs, those people that are currently making under $100,000 a year, which includes a lot of small business people. A lot of small business people make less than 100,000. A big percentage. The average small business person in the United States makes less than $100,000 a year. Well, those small business owners, one of the reasons they can't make as much money is because most of them are in the services industries, and there's a lot of competition for that business. But if there was more business in bending metal and making things into things and plastics manufacturing like I was in, if there was more businesses like that, no, you could make a lot more money doing that stuff than you can as a local small business owner who does, services, which doesn't make it, or even retail, which doesn't make as much money. Okay. I think I've got it all. I think I've said most of what I need to say. I think it would be fun to just go back real quick and see. Yeah, Tesla's about the same place, about $20 down, 218.75. That's actually pretty good. I would not have been shocked to see this. If you told me this, if you told me exactly where we'd be with regard to the macro 2 months ago, we'd say, hey, where will Tesla be if the Dow drops into bear, or the S&P drops into bear territory, and we miss on our numbers? Where would Tesla be? I probably would have said 185, 187, something like that. So far, we're holding up really, really well. And that prepares us for where I think we're going to go, which is going to be really, really good. Where's the market going to go? Yeah, I think there's going to be a dead cat bounce at some point, or it'll be a relief rally, or it will be a rally on the news, because the news will get better. But at some point, no, there's a bottom. There's always a bottom. Whatever goes down a lot, especially in this kind of situation, it always overshoots. So this is the kind of advice that any smart investment person would tell you. I'm not an investment advisor. This is not investment advice. It is life advice. All right. Well, just a little while ago, a Brian Wang video. People are talking about it online right now on X. They're saying you have to see the first 10 minutes of the Brian Wang video. That's what people are talking about. The first 10 minutes of that video. I'll put a card up right here. I'm telling you, the first 10 minutes is good. The last 10 minutes is the most important part. You have to watch that video. Do not miss that video. I'm putting the card right up here. Tomorrow will be a normal day. All the normal folks. As far as I know, I might have a shocker because I might need some help to understand what's going on tomorrow. But I think Brian White and Larry Goldberg ought to be perfect for what we have coming up tomorrow. So that's it. It has been great, as always, talking to you.